Hey y'all, hope y'all are doing well. We are back with another half review, ETF review. I said that last video, half review. I thought it was pretty funny, especially because it was on RYLG, which writes covered calls on half the portfolio. I thought that was just funny. Maybe it's just me. But welcome back. We're looking at today an ETF that's been requested a number of times. But if you know DIVO, right? I've done a video on DIVO. DIVO's a great ETF. It's part of the Income Fund Showdown. If you know DIVO, you know this fund, essentially. You just switch one letter around and you've got IDVO, IDVO, and it's from AMPLIFY ETF. So what's the difference between DIVO and IDVO? We're going to take a look at it, and we'll just walk through it. I'm going to use both Fidelity and the website, AMPLIFY ETF website, to glean some information, because sometimes Fidelity is a little bit easier to understand. What else do I got? I think that's it. Like, share, subscribe, do all that good stuff. Link in the description down below to my Amazon link. I'd appreciate it if you use it. Really, it doesn't cost you a dime. If you're Christmas shopping on Amazon, use my link, and Amazon sends me a few pennies, a few percent sometimes, on your purchase, and it doesn't cost you any extra, and it's a great way to support the channel. And those that do, appreciate you. So let's go take a look at IDVO. Now, just came out September 8th, 2022. So there's not going to be much performance, not much dividend history, obviously. But why would you want to own IDVO? 3 reasons, at least according to AMPLIFY. 2 potential income streams. So IDVO seeks to provide income from international dividend-paying stocks, and just like DIVO, opportunistically writing covered calls on some of those stocks. I wish they would put that in there, because it's not on all the stocks. It's not on the entire portfolio. It's just on some of the stocks, and we'll take a look and see how much they do. Seeks to lower volatility. So it doesn't necessarily pick lower volatility names. The way they seek to lower volatility is to buy dividend stocks. That's one way. And then to also write those covered calls, which brings in more income, which in turn lowers the volatility of the portfolio. And it's professionally managed. Access a professionally managed dividend and option income international investment strategy through the efficiency of an ETF. I think AMPLIFY has been doing a great job with DIVO. Some would say that they're not aggressive enough in some of their writing calls, but overall, you know, they've done pretty darn well. If I do say so myself, if you look at the Income Fund Showdown, that's coming up, by the way. I haven't given up on it. They're up there, right? The income's a little lower, right? It's a you know, mid 5-6% yield maybe, but it hasn't, as far as total returns concerned, it's done fairly well. So we're going to go over into Fidelity here real quick, and we're going to look at the composition of it. Well, no, let's do the basics real quick. The basics: expense ratio 0.65, just like DIVO. Net assets under management, it's brand new. I don't know. My personal feeling, I don't know if this is going to catch on very well. And there's a piece of this fund that I really don't like in this environment. Okay, now it may work long term, but I think in this environment it's a little bit shaky. Okay, we'll take a look at that shortly. At current rate, this was 12.3 cents. It paid out, but that was a partial month, because it said it came out September 8th, and this went ex-div on September 28th. So this is like 3 weeks of dividends and option premium, if you will. So 12.3 cents. That estimates out to about 6.28%. May go a little higher. I would expect it to, because international stocks actually tend to pay out a little bit higher of a yield. Okay, now let's take a look real quick at the composition. And this is what concerns me a little bit with this, in this environment, mind you. So this is important. This first line is important, because I think some people get this messed up, or I don't know. The investment seeks to provide current income as its primary investment objective, and to provide capital appreciation as its secondary investment objective. So their investment objective, first and foremost, is going to be to try and generate current income, right? Secondarily, they will look at capital appreciation, but that's not their focus. So let's take a look here. We have holdings, 61 holdings, 50 of them long, short 11. What is short 11? That's typically covered calls, and then the long is 50 holdings, so they hold 50 stocks. And I probably won't know very many of them, like their number one. This is just cash up here, but Tenaris, I see Icky Bank. It's an Icky Bank. Equinor, Vale, Goldfields, Banco Bilbao, Rio Tinto, BHP Group, and Unilever. Everybody probably knows Unilever anyway. And let's go over here and you'll see what I'm talking about here. So geographic exposure, Europe, 44% based in Europe. So out of the 50 stocks, 40%, so that'd be 20 some stocks in Europe. 30% in Asia, 17% in Latin America, 2% in the Middle East, 2% in Africa. 65% of it in the market cap of giant companies, 28% in large cap, 6.5% in mid cap. Morningstar rates it as a large cap value fund. Now, if we look here at sector exposure, this is where it gets a little shaky for me. Material 16.32, financials 16%, infotech 14%. Here's the one, energy 3.28%. Now we know in Europe, energy is basically at odds. I'm not going to say the W word in case I get demonetized, but energy is a real tough thing right now in Europe. So that is one thing that just strikes me as a little bit iffy. Healthcare at 10%, consumer staples 8.3%, communication services at 8%, consumer discretionary at 5%, industrials at 4%, and utilities just under 2%. So that is the overall portfolio. 50 stocks, 10 of them are covered calls, and we're going to look at the covered calls real quick. So you can go on to AMPLIFY ETFs and pull up the daily holdings, because they update them every day. And if we go all the way down, we'll look at the covered calls that they have, and we'll see that they have about 10. Taiwan Semiconductor. This is how you read this, okay? Taiwan Semiconductor, call option. This is the date that it expires, and this is the strike price. Okay, so they have a covered call out to October 22nd. They have October 22nd, but it expires this Friday, or it expired yesterday, but technically options don't expire until Saturday. So they have two of those, and then they have AstraZeneca. Just so you know how to read this, call option expires 10/22 at a 67.50 strike. So they have four of those. So what that means is, if AstraZeneca gets to 67.50 by October 22nd, they will have to sell those shares at that price. Now, they did receive a premium for that. I don't know how to read that. This says minus $2. I don't know what that means. Maybe it's $200 per contract. So maybe they got $800 because they got 4 of them. So you go along and you can just read all those. So right now, all their call options expire yesterday or today, depending on when you're watching this. So it's Friday the 21st or Saturday the 22nd. So what do I think about it personally? I don't know. It's too early to tell. You have the one thing with IDVO that they've proven their worth in DIVO. Okay. But does that translate to doing the same thing internationally? I don't know. And we won't know for a while. What is the most popular dividend ETF? Well, we can look at VYMI, which is the Vanguard International High Dividend Yield ETF. And this thing yields almost 6% now too. The Vanguard product is more diversified for sure. Because if we look at its holdings, we go down here and they have 1,416 holdings in VYMI. They've had some decent dividend growth over, 5-year CAGR of 9%. But it's just a plain Jane index fund. IDVO technically over time should be earning more than the Vanguard fund at 5.79%. With IDVO sitting at about 6% now, it's just going to be time will tell. So how does it look from the beginning of IDVO against VYMI? It's really unfair, if I'm being honest. But if we look at it here, IDVO slightly underperforming VYMI by about 1/3% over, what is that, 5-6 weeks. So really, there's not much to say there. Okay. So I'm a fan, but I think that if they do not show that they can outperform something like VYMI, then I don't know if the risk of, holding such a concentrated portfolio of international stocks versus VYMI's, complete diversified international is going to be worth it. I don't know. Time will tell. But that's just my opinion. And it's just like armpits. Everybody has one or two. And some stink more than others. So hope you guys enjoy. This was just a quick half review of IDVO by Amplify, the ones that brought you DIVO that has done quite well. So put it on your watch list. If you like international, if you think you need international, IDVO may be something to look at. Personally, I don't think I need international. I think most of the companies in America are international enough because most of them do business internationally. So that's, again, my opinion, my armpit, and that's just the way it is. Hope you guys have a good weekend. We'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.